One of our gap trades has now made more than 250% profit. The other gap trade is more than 100% profit. Today, March 15, as the stock hits a new high. And so in this video, we will follow up on both of these trades so that more people can learn how to use our strategy to beat the stock market. So our first trade was on January 19 at the bottom of this year for Gap, where we entered a long bullish trade. And so this was the video here that we shared on our channel, January 19, where we analyzed the unusual options activity of wealthy investors, sometimes insiders, trading on leaked information, and we found that it was bullish. So we took a bullish trade. And so if you missed out on this video, we'll put a link to the top here. Make sure to subscribe and hit the bell icon so you don't miss out on these future profitable opportunities. Because if you got on any of our gap trades, this second one here, you would have also been profitable too. This was just this week where we asked the question, will Gap make a new high? Which it clearly did, because its previous high was last year. Okay. And that was over here. This was its previous high. So we clearly broke out of that because March 11 was here where we weren't above that high yet. So there could have been a resistance preventing this from actually making that high. It would have came down possibly if you followed technical analysis, but we followed the unusual options. And so we traded another bullish gap trade. And so this trade is more than 100% profit already in just less than a week. So we'll go over both of these videos, and so we can learn as much as possible on why our strategy works, primarily because our analysis works very well. Okay, we have very sophisticated tools and methods to hone in on what the wealthy investors are doing. So on January 19, when we caught the bottom of Gap this year, this was the trade. It was a vertical call spread, expires today, March 15. On these call options at the 21 and the 26 strike calls, we paid $73 for each of these trades. And you can see on the profit loss diagram here, if Gap had gone down, we would have lost $73, the entire amount. Because this graph takes into account the cost of the trade. So when we calculate the profit, we do not need to subtract it out anymore. We simply take the profits of where it currently trades. You can see here, $200 of profit because it's trading at about $23.74. And so then we take that profit and do divide by the cost of 73. 200 divided by 73 times 100 to get a profit percent, which is 273%. Okay, on our January 19 trade. And for our trade just this week, we can see we paid $103 for each of these call options that expire April 12, 22 strike calls. So let's take a look at where this one is currently. You can see the profit of 107. Okay, so 107 divided by 103 times 100 is 103%. Okay, so more than 100% in less than a week. Okay, so if you are interested in these trades of unusual options activity, go to our website where we have higher probability of profit trades that we find where the wealthy investors are trading, because this is just a sample of our work. Okay, the majority of our time and analysis work is focused on our membership trades. Learn how you can gain access on our website. On January 19, for this trade, we had went over in that video. This was the day where we caught the bottom Gap when it was trading at $18.94 we detected these March 15 options that expire today. 21 strike calls. You can see 2,500 contracts. And the 26 strike calls, 2,500. So these vertical call options were quite unusual. And so we traded it based on our work analyzing the data. Okay. And so that is why you can see the price, what it used to be back then. Right. And that's how we were able to calculate this out. Buying the 21, selling the 26, it's about 73. Okay. And so if we look at the trade now that expires today, you can see that these 21 strike calls are positioned. How much are they worth? This is how much we can sell them back to the market now, somewhere between $266 and $286, right? And for these 26 strike calls, because we sold these, we just need to buy them back to close out of it, and we can buy them back for literally nothing, $0 to $2. So that's why this trade is so profitable, okay? And our other trade just this week, April 12th, we can see here, these 22 strike calls, our position, how much are they worth? $208 to $225. How much were they worth when we got into the trade on March 11, which is over here? So we take a look at the April 12th, these 22 strike calls. Here they are. You can see here, that's why it was $103, right? So you can see how it has already increased 100% because of these unusual options on March 11 that we detected and analyzed and shared in our videos with everyone on our channel. Okay, so that is how we were able to do this. So you want more details, make sure to watch both of these videos. We'll put a link to this March 11 trade over here. We'll put the January 19 one over here on the left. Make sure to go to our website to learn more on how you can gain access to the trades of wealthy investors with higher probability of profit. Take care and have a wonderful weekend.